Good afternoon, everyone. My name is Andrew Barber from Targa Communications in the UK, and I want to welcome everyone to this Targa Communications REFIRE Investing in Germany online roundtable, the last one for 2021. As regarding the outlook for 2022, we'll be asking what will be hot and what will be not. As our regular attendees will know, my German is almost non-existent, so once again, I apologise in advance for any pronunciation errors. 2021 began with lockdowns and curfews in Germany and across Europe, and the year is ending with the emergence of a new COVID-19 variant, and additional restrictions are once again being imposed. While the European and German commercial real estate markets had a better year in 2021, what are the expectations for 2022? Will Germany and other European countries continue to attract capital from different parts of the world? And which asset classes and which locations will be the most attractive for investors? To discuss what's going to happen in 2022 and the prospects for the investment markets, we have today assembled a panel of experts to provide us with their thoughts. Firstly, we have Diane Becker, who is CEO of Catella Property Consultants, GmbH. Next on our panel, we have Patrick Brinker, Head of Client Solutions at Hauck and Aufhäuser. We are also joined by Sabine Geuss, Senior Fund Manager, Healthcare for Principal Real Estate in Europe. And our final panelist today is Holger Hosang, who is responsible for transactions and asset management at Sonar Real Estate. As usual, today's panel will be moderated by Mr. Charles Kingston, who is the publisher and managing editor of REFIRE magazine, the leading source of information in the English language regarding German real estate finance for institutional and international investors. Now, before we hear from Charles and the panel, we thought it'd be good to hear from you, the audience, as to what your thoughts on the prospects for 2022 are. So we'll be asking two questions to assess your own views. What will be the best and worst performing asset classes of the year? And we will share the findings of the audience shortly. So without any further ado, I'd like to hand over to Charles Kingston. So Charles, over to you.
Great. Thank you very much indeed, Andrew. And as Andrew says, this is the last in our series of Targa Communications and REFIRE Roundtable discussions this year. We've looked at a lot of individual asset classes and raised a number of questions throughout the year. And today's discussion is, as befits the last month of the year, a much more of an open subject, allowing both our panelists and you, the audience, to tell us what you think will be hot and what will not hot next year. With the little gizmo poll which you've got, the sooner you can fill that in, the better, so that we can integrate it into our discussion as the results come in, and to see whether your views as a international and a German audience here coincide with those of our very expert panelists. And we're very glad again to have such a mixed panel of such broad experience coming from various different asset categories, all of which I think will enable us to get a fair idea of what the professionals are looking at for 2022. Just briefly to myself, I'm Charles Kingston. I publish the REFIRE Intelligence Report, and we have monthly publications on a website, and we're primarily focused on the German real estate market, interpreting that market for the international audience. Now, I'd like to just perhaps give our panelists, first of all, before we start on the discussion, about a minute, just to briefly say who they are again and what their main area of interest is in the real estate market. And then we can have a look at a number of the asset categories that we will assess whether they're going to be hot or not for next year. Dan, perhaps I might just start with you.
Thank you. My name is Diane Becker. I've been active in real estate since over 25 years, and out of which I've been working for Catella as a real estate advisor since almost 20 years, based in different countries, based in Paris, based in London, and now back in Germany, my home country, where I'm heading the advisory business. We're active on advisory, corporate finance. We're active also on asset and investment management within the group. So myself, I'm part of the corporate finance and advisory team.
Great. Sabine, tell us a little bit about yourself and principal.
Yes, good evening. My name is Sabine Geuss. I'm Senior Fund Manager Healthcare of Principal Real Estate. I've about 20 years experience within the real estate sector and about 10 years track record within the healthcare asset class. And yes, today I'm here, let's say, as the speaking for 𝐒𝐃𝐄𝐊𝐄𝐑𝐒 so far. And I'm based in Frankfurt, and Principal is the European arm of the US Principal Global Investment Company. And we have a track record of about 10 years within the asset class healthcare.
Excellent. I think we will be talking about that later on. Patrick Brinker, please.
Yes, thanks, Charles. My name is Patrick, and I'm head of real estate investment management and client solutions at Hauck and Aufhäuser here in Frankfurt. Before I was managing director of 2 asset management companies in Hamburg and Bremen. And the last 2 years, we built up the real estate investment management here at H&A, and we launched 2 real estate funds for institutional investors in the segments food retail and social infrastructure medical centers.
Great. And Holger, if you're sitting in Frankfurt as well, are you?
I do, yes.
Then all 4 of our panelists are actually here in Frankfurt, as I'm calling in from Berlin. Holger, please tell us about Sonar.
Thank you. Yeah, my name is Holger. I'm one of the 5 founders of Sonar Real Estate. We just had our first anniversary last week. So at the 1st of December last year, we started our business. We have in our management team, we have over 100 years of real estate experience. Nevertheless, we are a young company. We have 5 offices all over Germany, from Berlin, Hamburg, Düsseldorf, Frankfurt, and Munich. As I said, I'm sitting in Frankfurt, responsible for the southern part of Germany, so Frankfurt and Munich, with respect to transaction and asset management, co-heading with my colleague Nick in Berlin, that entire part of the business. We are an independent asset management and investment company, having as well German institutional clients, as well as Anglo-Saxon private equity clients for whom we work and manage a portfolio of roughly 2.5 billion with 35 people.
Great. Well, for many of our audience who are perhaps not sitting in Germany, you may not be aware, or you probably are aware vaguely, but we've been getting this all day, that today is in fact the day when the new government takes power in Berlin. And I would say that the general reaction from the real estate industry in advance of today, but also as the coalition government was putting together its manifesto, has been positive. But perhaps before we start on the basic discussion, and without getting deeply involved in German politics, maybe the panelists might like to just say a very quick word as to how they feel about the new government and its prospects in general for real estate in Germany. Sabine, perhaps you might say a word on that.
Yes, I think we are all exciting and we are looking forward. And what the new government will bring and their purposes. But I think we are not scared.
Well, that's good. That's good. Diana, you're not looking scared either.
No, not scared. I think what we now have is a Ministry for Construction and for Living, which is a woman also.
Yes.
So, yes, I think that is definitely necessary. And one of the goals, of course, is to have 400,000 new flats per year. Now, is this going to happen or is this not going to happen is another question, because, I mean, we have still city and towns, land planning, urban planning, and we will have to see how they will manage to get this done. So, but overall, of course, very positive. And
very positive.
Yes, very positive, with new regulations, of course, enhancing all the other trends that we will discuss later on, I guess.
Very good, very good. From the point of view of the commercial office sector, Holger, is there much talk as to whether this is likely to be a good thing for the sector?
And the main feedback so far is, I think you could say, is that it's a positive signal towards the industry that we, again, which we had in the past, have our own ministry, so to say. Yeah, someone who's really taking care about the industry, who might even show up in our large meetings, in fairs and stuff like that. I think that is very important, that we have a counterpart, someone to talk to, someone who you can talk to, you can touch, and really have a discussion with. If I look at all the other things that we find in the 170 something pages of the coalition contract, I mean, we will touch ESG, I think, later. There you find some things where you might say, okay, how will that be impacting us? We will come to that later, and let's see how we judge on that. But I think fighting against climate change and doing something for the carbon footprint is generally something you can't avoid. And as the industry, we can't avoid putting that aside any longer. ESG is here to stay. And happy to dig in a little bit deeper later on.
Very good. And Patrick, what's your position on this? Are you as enthusiastic as the others?
Sure. After 16 years, everything new should be better, I guess. So the further government has not covered themselves with much glory, in my opinion. So it's a good step that we have the new ministry, as my colleagues said before. And yes, we will see if they do what they say, at least.
Indeed, we'll see. I mean, as Holger said, one of the features of the last number of years was the sheer difficulty of getting any government ministry to pay full and undivided attention to the real estate sector. And it was frequently commented upon that Horst Seehofer was very frequently absent from many of these events because he was simply, I guess, drowning in a whole load of other responsibilities. So I think that's one of the key take-home messages initially, is that people are glad to see that there will be a Bauministerium focus on the needs of the real estate industry. And of course, it does seem from the coalition's statements that they have put housing and building and construction right at the very front of their agenda. So I can only hope that carries on in the manner which we started. But there does appear to be, if you read the surveys and look at the surveys, there does appear to be a serious upturn in confidence in the real estate sector, despite the fact that we're about to head possibly into the fourth wave here in Germany. And a sense that the real estate industry is emerging from the worst of it. There does appear to be a good background of debt equity looking at the market. Perhaps we can have a look at a number of the main asset categories here, and just while we're waiting for Andrew's little poll to come in there, let's talk about a number of the sectors and highlight some of the key elements that will either make them hot or not. Let's have a look, perhaps start by looking at the residential market. And as Diane said, there are supposed to be 400,000 new residential units being built every year. Diane, you don't sound as if you're convinced that that's going to happen.
There is certainly very big demand and an interest also from investors. It's not only the tenants, it's not only the buyers of residential units, but it's also investors. I mean, we've seen over the past years the rise of resi, as we call that.
Yes.
And if you look at the German property market in 2021, you will see that resi is has the biggest share of investment volumes in 2021. So it has, it's even end of the third quarter, bigger investment volume than the office market, which is really something completely new in Germany. So there is interest, of course. That is something which has been driven by the Corona crisis and all the reflections that one can have on occupancy and occupancy risks. So I think there is a lot of demand, and there would be enough liquidity on the market, both from equity side and also from financing side, to get investment on residential in of that size. The thing is really that we sometimes lack in urban authorities and in planning rapidity. And also we have construction issues. We have the limits of construction capacity. And we've seen last year what Corona was doing on materials, etc. So I think it's a real task. There is the place to do it, and there is the interest to do it. And I think with everyone working in the same direction, we can probably get close.
But a year ago, investors were staring down the barrel of the Mietendeckel in Berlin, and there was considerable fear that regulation would come in to make further investment, even maintenance of real estate, of residential real estate, problematic for investors. Holger, do you think the removal of that has lifted the lid on German residential as an attractive asset class again for institutional investors? It's going to be a political issue, isn't it, one way or the other?
It is absolutely, and the discussion just reminded me of something I read earlier today. This morning there was in the press there was a little article that the researcher from Savills published, like 21 is a turning point for residential. Yeah, the good times are over. Yeah, so it was a peak, and after the peak you just can only go down. Maybe that's one of the points. But also in terms of really that the framework will never be as good as it was in the past. Yeah, maybe that comes also with a little bit of fear what the new government might impose on the one hand, on building a residential units. On the other hand, they want to build 400,000 each year of that. So that's going to be that needs to be balanced, and we will see maybe really early on how in the new government the roles will be split. So there's Clara Geiwitz as our new ministry for construction and living. She maybe needs to fight against Habeck, who is the overall climate and vice chancellor, climate ministry. So let's see how that works out. Yeah, if you have to put solar panels on every roof, that's going to be very likely to be so. But there are, as you said, Diane, there are no solar panels available. What do you do? Yeah? And how do you deal with the city? And you might pick one of our big 5 or big 7 cities who says we want to see green roofs. Yeah, what do you do with the solar? Do you put that on top of the green roof, or will the green roof move away? So there are some things that need to go out of the way before we can really start construction to get to the 400,000, and maybe there's a little bit of truth in what that researcher's article says. Yeah, that maybe the peak, after the peak there will be a little bit of maybe flattening out the curve.
Flattening out, but if solar panels are probably not the only bottleneck. No. I would imagine, Patrick, maybe you can add to this. If there are several other bottlenecks, including a shortage of labor and a shortage of people to replace windows and all that sort of thing, are we talking about a flattening out? Are we talking about a fall in the overall price level, or are we talking about a slowdown in the rate of growth, the rate of increase?
In my opinion, yeah, we will see a further increasing yield, and yes, it's a need for everybody. So it's in the next years, residential will further be interesting.
But there is still overall a big shortage of housing in this country.
Yeah, and for this, it's interesting for institutional investors in the next years again. So, yeah, the question is which sort of living could be interesting in the future? Is it multifamily houses, or is it maybe niche segments like senior living, or is it maybe gefördertes Wohnen? So you should differentiate your view on the residential market, in my opinion.
And from what we hear, there is still huge demand for subsectors of the residential market, such as micro-living, for example, or student housing. There seems to be no limits to that growth other than the limits of assets which they can find. Sabine, I don't know. Are you confronted with all of this? I know in the healthcare sector, assets, the shortage of suitable assets with planning permission and so on is a big bottleneck. But in housing, this is surely an issue as well.
So you were talking about the senior living, probably? Or?
Well, no, I'm simply saying that from what we see, there's no slowdown yet in the demand from investors for things like micro-living or student housing or other sub-segments. And of course, there's, as part perhaps of the healthcare sector, there's also senior living with various new models of senior living coming about. Yes. And there seems to be no shortage of demand from investors for exposure to that segment.
No, there's a really huge demand. That's right. And if you just gave me the question, hot or not hot, I would say probably, of course, hot for healthcare, because there is the demand of investors.
Well, we'll get to healthcare soon, but just while the government is making such a big issue about this great new commitment to housing, okay. Maybe any of you would have an idea, if the government really comes out with all guns blazing, what opportunities could there be there for investors to say, how can we latch on to the commitment of the government now, who've made this a number one priority to build 400,000 new residential units a year, bearing in mind that they've been threatening this for the last few years and they never got above 300,000 units. How, as an investor listening into this panel discussion, could you be accessing some new business opportunities there? Diane, I'm sure you've got some ideas.
You were talking about the
if the government is making a major commitment to affordable housing, who's going to move into that sector or increase their activity in that sector?
I think you can have, well, affordable housing, but we were talking about, for example, student housing. You know, when we started 2021. Student housing, micro-living was almost non-existent anymore, because we had all these empty student housing units and buildings and new projects. And probably that is something which is still interesting for investors. And they still, keep this movement going, because it's taken out of the Mietendeckel, of the cap trends.
Yes.
So it is still something where you can find not only the students, but maybe people that live outside the cities, that go into the cities for 3-4 days a week, beginners of and in new job positions, and they use this kind of premises now quite often. So it's coming back, and so are all the other segments of the living today. And I think when it comes to development projects, you must not only look at the big cities and at Berlin, maybe, but there are so many places where in Germany we have the advantage of having centers, regional centers, and very healthy, economically healthy regional centers where you can have housing, and where housing is strong and needed as well. So there is a lot of opportunities still in the market once you go outside the top 5 or the top 7 cities.
Okay. Anybody else like to say anything on potential opportunities in the residential sector, Holger?
I would think seeing these announcements and seeing the plan of the government, I think, first of all, that is now the hour of the developers. If I would be a resi developer, I would just now go out, buy as much wood as I could, hire as much people as I could, and then go to the cities where I'm familiar with and say, hey guys, I'm here, give me land, I'll build it up for you, I'll just do it. And then I think in the long run, these kind of, and what the government really wants, I don't think they want small flats, micro apartments for commuters. That's not what they're heading for. That's not solving our problem of having an issue with
Certainly not.
low. Yeah, absolutely. And so I think if you then really go, it's not only it's subsidized living, but it's also regular living, just for normal families, for the policeman around the street who can't afford a flat any longer in Frankfurt downtown or in one of the popular areas. But for them, you need to build just new areas, new housings. And to go into these developments, I think that is a very good long-term cash-on-cash investment. And who should do that? Pension funds, insurance companies, buy that stuff now freshly from the developers. I think that should be the play for the next 12, 18, 24 months.
Okay, well, that sounds like a definite hot for residential then for the next foreseeable future. All right. So if you can somehow attach yourself as an investor to developers or to providers of building materials with future forward contracts and so on, that's hot. Good. Let's have a quick look at the another acknowledged winner in over the pandemic period: logistics. Everybody has some idea of that because it's increasingly encroaching upon our cities as well, and we're seeing it right down to 30-minute delivery and so on. Patrick, what do you think? What do you or would Hauck and Aufhäuser think generally about the prospects for logistics, given the huge demand we've seen in the last couple of years and falling yields, such that a number of logistics assets, which used to be a sort of outlying asset category, are now being traded for the same price as quality office properties?
Yes, it's for us, it's a very difficult question. Yes, we see logistics is very hot at the moment, and everybody wants to have, and there's not enough asset for the huge amount of capital who wants to invest in logistics, but the yields are falling, and I guess a multiplier of 30, 34 for logistics object. I'm not sure if it's the right risk-price ratio for this asset class. If you think about perhaps 10 or 15 years lease contract, nobody knows what the tenant's demands will be in 10, 15 years about the logistics objects. So I'm not sure if it's still hot or would be hot in the next 5 or 2 or 3 years.
Interesting. Sabine, I'm sure within principle, you look around at various other asset categories all the time with a view to the potential for funds. What are you saying within principle about say, logistics or even, say, subcategories of logistics which are allegedly hot, such as data centers and others?
I think what Patrick says is true. So we will look how logistics will look like in future, and we also see the high multiplies. And I think what Principal, for example, also is looking for is data center, and that's one of, let's say, our new products. And I think that's also one thing we need to look probably for new products, for new challenges in future. Yeah.
Okay. What could be interesting in the next years could be last mile logistics, but this is also difficult to discuss with the cities if they don't want to have logistics in a city often. So, but this could be hot, but the standard logistics, I'm afraid it's a bit the yields are decreasing too fast.
It's not only hot; it's overheated. I would say honestly, it's super hot, yeah, and just too much. And on the other thing, I fully agree with your point, Patrick. I think last mile that's a new really hot thing. And to overcome it, what you could do is really develop a new asset class, which is like a mobility hub, yeah, where you combine commuting, the urban transport with logistics. I think that could be an asset class which one you could overcome the concerns of the city that they don't want to see that. But if you say, okay, with that asset, we also solve you the issue of all the people coming in by car. We give them a nice area, they park the car, they go with public transport, and you have your last mile issue solved. So that could be something which could be of huge interest.
Maybe.
Please, Diane, yeah. I mean, will yields continue to come down?
I think, you were talking about the sub classes of logistics, because yes, we have logistics, but how much of what we can trade in that sector is really the pure logistics, where the yields are really around 350 when it comes to long-term leases and to new buildings. You have the whole, yes, we have the online trade, which is coming out from retail, but we also have the real storage issues. Companies have now started and brought back production to European countries, and probably the storage issue is bigger than it was before. It's not only pure logistics. You can have corporate warehousing rather than logistics. So where the returns are really offering quite high gaps to office or residential. So as a mix, I think it's a very interesting asset class, and the trends in retail, the trends in how people do their shopping. I think the trends is not going to turn really back. So it will be, when we come to retail later on, of course there is retail and retail, but I think we will still need logistics, and might be that the logistics is the new reality, what we see in logistics pricing and in the interest of investors for logistics and everything which is around logistics.
So for the panelists, then, logistics is still hot. I'm getting the message that it's still hot. Maybe you need to be much more defining your subsector. But what about some of these specialist niches like data centers, towers, cold self-storage, other subsectors which are springing up? For the fund managers out there amongst you, is there an increasing desire to wrap up some of these segments into funds which you can now market to your investors at the moment?
I think talking about niches, I think it's always interesting to find the new niche and to go into that one, be like first movers. What we have seen over the year is an increasing demand for kind of life science projects, life science assets, where people maybe think about what they have seen, what happened with BioNTech and other players in the market, how they developed, so that all of a sudden you don't only want offices, you want offices plus laboratories, or maybe even more laboratories plus a little bit of office on top of that. So this is an increasing demand we see. So I would even say maybe that's not any longer a niche. That's kind of established, especially.
But have we moved beyond the stage of people just inquiring about this, or are we actually seeing some real money coming into the German market, for example, to invest in life sciences?
We see real money asking for that product class, asking for that, and really keeping an eye on it whenever something pops up, to really jump on that. So that's really, maybe it's not already in what you call hot in your category, but it's getting there.
It's getting there, yeah. And it's certainly been getting there and growing in the United States and in the Anglo-Saxon market. So I presume, with the usual gap of 2 to 3 years, the first products, interesting saleable products, will be coming on the market.
Of course, and especially with regards to what we haven't discussed so far, which is ESG. Yeah. Because that is of course one of the winners of ESG compliant funds and fund vehicles. So it's
the ESG affects all of you. Let's have a quick word about ESG. Is it changing your lives at the moment as you sit there and you look at investment assets How big a role is ESG playing?
Huge.
Sabine, Sabine, maybe in your field, can you give us a few little insights into how ESG has changed your assessment criteria?
Yeah, I think it's included much more in all our company structures and in all our things we are daily doing. So even when I'm talking to to the operator, let's say, or to our tenants, this is also a topic. No, we asked them how you handle that. For example, yes, when we're talking about care home or other operated driven property. It's very hard that because you can't really control the tenant about their consumption. I think so. In that perspective, it's part of transparency, and it's also exchange about that topics in regards to the tenant. And of course, in every step you take in your daily business, you have ESG included. When you look for a new investment, of course, you check ESG topics and you have a look at how green is the property and what other aspects are fulfilled and are not fulfilled in respect of ESG. When you do a new leasing contract, you have that topic again. So it follows you in every step you do in your daily business, I assume, and it's important that it's in our mind, and it's important that it's a normal and standard thinking, and then I think it will be also successful in future.
Patrick, your bank has got 2 fund areas. How big a role is ESG now playing?
Oh, yes, as for everybody, it's a very big role, and the regulator shows that we have to do much as a bank too, and as an investment manager even. And so for us, in concrete, we elaborated sustainability due diligence before buying an asset, analog to legal and technical due diligence. We set up a working group with all participations along the everybody who works with us in a transaction to implement these findings of these sustainability due diligence in practice. So what should we do in concrete with this property that is so that we do not have the risk that would be a stranded asset in the future.
Well, okay, that's one way. That's one way of looking at it. You're looking at it from the perspective of the investor. But Diana, the role of it's a 2-pronged sword, or there's a pincer effect here, isn't there? With tenants, in fact, being as much growing up to become as much the police of the desirable asset as the investors themselves.
I would say that it's a together between tenants, investors, and banks. And when we look to where liquidity goes to, I mean, it's all the core funds that have today. It's not only the specific ESG funds, which are now, of course, coming on the market, but it's every core investor looking at this criteria nowadays.
And afraid to touch anything frequently that is not cleaner than clean, right?
Yes, exactly. And of course that is true, I think, in every country. I think that is in the whole of Europe, and of course also UK. Now we have to say Europe plus UK.
Yes, sadly, yes.
Yes. Yeah. So it's Europe plus UK. The ESG compliance is something that is really weighing also on pricing, but it's also an opportunity, for a lot of investors, because you can have the strategy to do the manage to green, manage to core today very often is manage to green, and that is an interesting strategy for a lot of investors, and it's a question, of course, of pricing, And I think we are going towards that that category in almost all the European markets.
Holger, I know that within Sonar, this ESG issue is also very much your particular baby, isn't that right?
True. That's why I'm always asked to wear green shirts.
Okay.
No, sorry.
But it is a big issue. How big an issue is it for you now?
Yeah, you can't underestimate it. It is the issue these days. And I would, in addition to what Diana just said, I would say it's not only the core investors, it's really across the market. So a lot of our clients are coming from the value add opportunistic perspective. And also they ask us, how do we deal with the topic? What do you do to tackle it? Because again, if they want to sell in 3 to 5 years, they know every core investor who's going to buy that asset will have another look at it. And what's interesting in the discussion here, once we say ESG, everybody talks about E, only E. But let us remind, there are two other in ESG, and we have to think about the S and the G, and we have to think about how serious we will take them. Yes, they are much more heavier to tackle because you can't measure them really. Yeah, you can't, not like for E, you just put an engineer on, he gives you exactly the consumption. He says, yeah, you have 150 kilowatt hours per year per square meter, that needs to go down to 20, whatever. That's not as easy in the S and in the G factor. But we need also as an industry start thinking about it. We need to think about what do our assets do for the community? What does the S in social, what does it mean for us? What can we do? Do we have to put kindergartens in every asset? For sure not. But we have to think as a community, and also on the G, on the governance side. What do we do? Do we all of a sudden exclude tenants from a certain industry? Don't we want any more tenants who deal with weapons, who don't pay the minimum loan and everything? This is something where we are not yet as far down the road as we are with the E. I think as this discussion shows, everybody jumps on the E, but we have to see it holistically. And then it's the issue of the day, and it's really complicated to get it all under one column, so to say.
I mean, we had already this year, Holger, certain tenants not on the so-called ESG compliance list, which makes it sometimes already difficult for some properties to find buyers.
Exactly what I wanted to ask you, Diane. Given the fact that we're looking for hot opportunities in this particular little discussion, asking this horrible question, is there a market, or are we already seeing opportunists springing up to invest in those assets which will not make ESG compliance and will fall between the cracks, and somewhere between that and becoming stranded assets? Is there an opportunity for any investors in that niche?
Yes, sure, there is. I wouldn't say it's a niche really. I would say if you look at the overall portfolio, let's say look at the German overall office portfolio, and look at the part of it which is ESG compliant and the part of it which is not. Of course, there are a lot of investors and funds who have the in-house knowledge and the in-house capacity to do the manage to green and to lift these assets up to ESG regulations, if ever we get ESG regulations.
Yes, that people can fully understand. Yes.
Yes, that are really for everyone easy to realize. So then there is a lot of properties, or there are a lot of properties today where the need is there. To find people who have the capacity and the human resources and the relationships and the knowledge to bring these assets to ESG.
Okay, well, Diana, I'm going to interrupt you there, because I think that statement probably applies across several asset categories as well, right? Yes. And we just want to briefly touch on on a couple of the others. We have dealt, and a lot of people over this year will know that we recognize absolutely that there's a big question mark hanging over office, and the general idea seems to be that some offices will prosper and some won't. And this is what you're talking about, Diane, that there will be several which will be the subject of deep due diligence over the next couple of years to see what can be done of them. Having a look at retail very briefly. Now, everyone has got their own views on retail. The winners have been so far the food-anchored retail. There we've seen yields coming down considerably as well over the last couple of months. They've definitely been a winner of the pandemic. Have any of you got ideas for other areas within the retail sector next year? There's been a number of studies coming out that suggest that there may be opportunities in shopping centres. What do any of you feel? Holger.
That's one of the most difficult questions these days. What's going to happen with retail? And again, now we see it's not really a lockdown, but it's a lockdown for the non-vaccinated people, what we experience these days in Germany. And what you will see is a flight into online. Yeah, so people will buy their Christmas gifts online. We will need much more logistics for catering that entire thing. But shopping centers, we are very cautious, to be honest. You have to really dig very deep into them to see what will be your new anchor tenant. In the past, it was always quite easy if you have your one or two fashion anchors in your shopping center, that quite kind of worked. So what is the new fashion? What is here to replace it? So what you need to do is to change them, to change the use. A shopping center is in the future maybe not any longer 100% retail. It will be a mixed use property. So the fun can come from converting a shopping center into a really mixed use asset where you have part of that offices in there. You will replace a lot with really food anchored retail, with neighborhood shopping opportunities, maybe a little bit of living as well. Maybe some of the 400,000 flats for the government will come out of conversion of shopping centers. So I think that is the task. The pure play, like in the pre-corona times, I think personal view that is gone. That is kind of over.
That's good. I know AEW came out with the report there recently that suggested that after the widening of the yields over the last couple of years, they're looking at opportunities for certain shopping centres. But Patrick, among your funds, you also have a food retail fund. Is that going to remain a hot sector in 2022?
Yeah, clear answer. Coming back to that, what you said, Holger, it's a very challenging to refurbish a shopping center into that, what you said, with multi-tenant and diversified asset classes. I'm afraid it would not work in much locations as good. If we see the 𝐒𝐏𝐃𝐄𝐑𝐿, for example, here in Frankfurt, with a new food court, I don't know if it would work in every location. But on the other side, if I walk across the 𝐒𝐏𝐃𝐄𝐑𝐿 here in Frankfurt, I see many people. So they will go shopping.
But you also see many closed up stores.
Yeah, because of the high rates. They have to come down the rents for the spaces in the house.
Not good news for investors.
Yeah, but it was too much in the past.
Right.
That's
okay. So you're saying there's entry opportunities, but tough luck on those who invested 3 or 4 or 5 years ago. Yeah.
Yeah, and so there are many views for retail. If you see a discounter like Netto in a small town with 10,000 inhabitants, and you will have to pay a multiplier of 22 or more. And if you see an not a really shopping center. Let's talk about a hybrid shopping center with food anchor, and you can buy it in the center of a midtown of 50,000 inhabitants with a food retailer for a multiplier of 16, 17.
Okay, so there are what you're saying is there are opportunities still within the subsector of food anchored retail, and it really is a question of finding the right locations and the right portfolios. I'm looking at Andrew there, and I'm wondering, has he got any feedback yet from his poll? Andrew?
Well, we've closed the poll now, so we can publish the results. So in terms of what is hot, it's pretty close with industrial and logistics and residential almost neck and neck. Healthcare was third, which will please Sabine. But in the what is not going to be, or the worst performing, the audience think that retail, hotels, and then offices will be the worst performing sectors next year. So, yeah, interesting stuff.
But that's interesting. It's interesting. Leisure, which we haven't really talked about, but we probably don't have the capacities to go into that in depth today, is, I think for most people, it's quite visible that it is a really struggling sector at the moment. And some people seem to feel that the business hotel segment will be struggling for another couple of years. Whatever about holiday hotels and hotels being converted into apartments and serviced apartments and so on could be another hot sector. From the companies that we're talking to, there's a lot of them looking to try to do that with 2- and 3-star city style hotels to convert them into another use. But looking at so we've had a look at industrial, we've had a look at logistics, and hotels and leisure is a struggling area there. But let's have a look at the third strongest one, which a number of you have exposure to. And Sabine, you have direct exposure to the healthcare segment. What would be hot for our investors to be looking at now? It's a very big field. It's clearly growing. What's hot?
At first, it's a crisis-proof investment, as you can see during the COVID pandemic. It was one, I think, of the asset classes which go very straight, and even those properties were called like systemrelevant, our new word learned from the pandemic time.
Yes, system relevant, system relevance, systematic relevance, systemic relevance.
Yeah, so there's a high demand on that kind of assets because we have a growth aging population, and so there is high demand on that facilities. I think we will see in future much more diversified facilities. Of course, we will still have, let's say, the classical care home, but beside that, we also see a lot of combinations and let's say modern combinations of facilities, which, for example, it includes not only care, it also includes some assisted living. You look like a quartier, for example, where you have care home, assisted living, daycare, and maybe, of course, you also can add a kindergarten. So looking on that, what Holger says, in that asset class, we really have we are very good on the S, yeah, we can say. There, and we also look in future for let's say, for elderly people, which requirements changed, yeah. People will get much more older, but people also want to be much more live independent. Yeah, they want to enjoy, let's say, the last years of their live, and they probably want to enjoy it with the money they already still have. So it's the elderly people who now live in the assets are not the one who will live there in future, because I think that will change also. They are much more looking for an independent life. So, for example, they would be great to live in a facility where they can first only live and then put services they need for care, for example.
Okay, I'll tell you what. That's all. That sounds very attractive, and it certainly suggests that from a demographic point of view, there's still going to be demand. But we've seen an enormous increase in the multiples that people are paying for healthcare facilities. It was unthinkable some years ago when people were paying single figures or early double figures for homes for elderly people and medical facilities and so on. Now they're paying 22, 23, 24 times rent with
25,
operator.
yes.
Yes. I mean, Diane, are people losing the run of themselves? Are they paying too much? Are they starting to look at throwing too much money into this sector? The price of a bed has gone up from 100,000 to 170,000. People are paying 170,000 euros now to invest in a bed in a care home. At some point, there is diminishing returns, surely.
I think it's much more important that you have a deeply look into the leasing contract and into the, let's say, lease, that you can be able to refinance that also from an operational point of view.
So let me move to Diane. Diane, is there enough money coming into the sector? Will there be plenty of money, or is it starting to overpay for assets in the sector?
There again, probably several answers to your question, Charles. In fact, you have several parts of the healthcare sector. You have, for example, the high prices. You will find them in the top 5 cities, like for other asset classes, which means that you're not paying only the fact that you have healthcare in that building with all the regulations attached, and but also you have a plot of land which is probably worth a lot of money, and you have a good lease, as Sabine just said. So it's very often a combination of what we now call in modern language the medical office building. So healthcare is not only the pure caring home, it's or senior housing. It's also medical buildings which host medical centers, day centers, for example, and that's probably where
Patrick Brinker here, his fund invests specifically in doctors' properties.
Yes, because
Go ahead, Dan.
No, I think that's where the higher prices probably are paid for, because the real healthcare sector is quite granular when it comes to regulations in Germany.
Yes.
And I don't have to tell you, Sabine and Patrick, what fight it is to find the same regulations between the north of Germany, the south, the east, and the west. And so it's a quite complicated asset class and quite granular. But the high prices very often, Patrick probably can confirm, is the medical office building, sort of.
But Patrick, you have no shortage of money that you're planning to invest next year in the sector.
No, we have no shortage of money, and but we have luck that we have a big pipeline for investments too, and that's the main point for doctors' houses, that you should build up a pipeline from project development up, and not wait that you have that you can buy the
finished asset,
the already finished properties. So you have to work with the project developer to source the right tenants, the right doctors, and to mix them right in these houses. And it's a very stable investment. Doctors don't leave the properties normally for a long time, and they generate stable income. And yes, we have the mega trend, healthcare. It's not only the demographic change, it's the medical progress too. And although the changes in the healthcare system in Germany, we call it Ambulantisierung. I don't have the English word for that. The closing of hospitals, shortage of primary doctors in Germany.
Basically, it's a shifting of the weight from the sector to home care,
patient care,
rather than people going inpatient care. Yeah.
Yeah, and there's a big need for new doctors' houses.
So you're saying within the healthcare sector, doctors' houses itself, and among others, is a hot sector. It's hot for next year and the coming years?
Yeah, sure.
And what is not hot in the healthcare field? Anyone, because you all know quite a lot about the healthcare sector. What would you say? Is there any element of it that is not hot? if this Ambulantisierung is taking place, does that not mean a lowering of the demand for certain beds somewhere, or no? Anybody?
I think probably what is not so attractive is not the reha clinics, it's the
rehabilitation clinic for our
and the rehabilitation is hot, but the other clinic type where you go.
You speak about the acute clinics.
Yeah, sorry, yes, acute clinic.
Okay.
I think this is very difficult because it's hard to split their operational side and owner side. So I think that will still be a difficult part to invest from my point of view.
Okay. And would there be any upside opportunity if that is heading downwards? Can there be conversions? Can they be converted into other assets? Would there be investment opportunities for niche investors in that area?
Yes, because if the acute clinic is closing, you have to build an alternative.
Could you turn it into a doctor's center, for example?
Yeah, for example, or to senior living, for example.
Okay.
Not in every way, in every location, of course. Sometimes you have to rebuild, but sometimes you can use this older clinic for a new tenant. Yeah.
Very good. Well, look, Andrew, I'm keeping an eye on you. You may have a couple of questions coming in from the audience there. Let's use the opportunity to ask the experts anything else as to what could be hot or what is not.
Well, we had questions. One was that had anyone actually checked the 400,000 dwellings figures from the government? I don't know where that figure has come from. So that's one point. And the other was against the background of exaggerations during the financial crisis in Southern Europe, are similar bubbles conceivable in Germany? There's an interesting question. I also have a question which I would like to ask is, during the earlier stages of the pandemic here in the UK, we saw a flight to the suburbs and a big increase in people looking to move away from the city centres. And I wondered whether the panel had a feeling about the locations within cities and whether there are better opportunities in the more green, and I use that term loosely looking at Holger's jumper, but the more green areas of cities and the suburbs and out of town locations, whether the panel have any feelings on that.
Well, let's answer that briefly if we can, but I'd also like to hold on to that second question, Andrew.
About the possible bubbles in Germany with the background of the exaggerations during the financial crisis.
In fact, if you don't mind, let's have a look at let's just quickly see if we can get some responses to that. Okay. Holger, a bubble in Germany, is it possible? Are we starting to believe our own propaganda?
Oh, we should. No, but I think that is maybe more for someone from the ECB to answer that, the European Central Bank. But given what we see, and you asked it also, Charles, just a couple of minutes ago, do we overpay in some sectors? And I mean, yeah. Overpaying.
And Diana is on this subject as well, the issue of pricing, for example.
Yeah. So if we see that in some areas, that might be a hint for a bubble, but generally, I would say the risk of a bubble is was bigger in the past than what we see these days.
Diane, what would it take for investors to decide that Germany is getting a bit pricey? Would it be purely an issue, as Holger says, of interest rate rises, or are we so convinced that as long as that there is a spread between the yield on bonds and the yield, no matter how low it is, on real estate, that money will still continue to pour into Germany?
Do we want to limit that on Germany? Because I think
indeed.
Okay. Because if we limit that to Germany, then I think we have still very good underlying data in Germany or conditions in Germany, so that pricing as opposed to interest rates and the gap, the positive gap, you can still have in an asset allocation when you buy real estate. I think it is going to be very, very attractive. But then we probably need to be careful in certain sectors where what we discussed earlier today is where are rents heading to, and is the asset, whatever the asset class is it over, what does the rent look like, and what does the sustainable rent look like, and what is the sustainable building quality look like? And I think that is probably the issue. I don't, it's very difficult for us in the market. I think it's both true for investors, for vendors, for buyers, for advisors to say what is the sustainable normal? Do we really expect the interest rates going up and decreasing so much the gap of an interesting asset allocation in Germany for real estate, that together with risks on exit, etc., I think there is a lot of opportunities in the German market where we're not in a bubble and where pricing is sustainable. I'm really convinced of that.
Of course, traditionally, German investors within their own market are more interested in ongoing current yields. Over the years, as the German market has gone up, international investors have been also planning their exits, so that if they're going to invest into the market, they've already got their eye on 5, 6 years, 7 years down the line. Yeah. And for the returns which we've got in the last 10 to 15 years to be repeatable is going to take quite some remarkable economic performance, isn't it?
Definitely. That's definitely the case, but we have still, I think, it's always the same thing. It's very difficult if you generalize things like this. Let's go for office, for example. What is going to happen in the office market? After some months where everyone thought that we would need probably only 60-70% in the future, maybe only 50% in the future of the office space which we used to have in the past. I think people are now more aware of office is not going to die, is still going to be the most attractive commercial asset class and the biggest volumes. So what are we going to take into account when we look today? So it's going to be the location. Is the location core? Is the asset quality, ESG, or sustainable? And all these factors together with market demand and liquidity in the market, I think if you plan your exit now in the medium term, there is no reason to think why, let's say, 200 basis points of higher interest rates and in core areas, 40% lower rents. I think. Okay,
and I'm sure Holger would agree with you on that. Otherwise, you would not have the same exposure to office as you have. That sounds like another, I'm not saying hot, but warm. If you find the right asset, there's every bit as good a reason to invest as there's ever been before.
Yeah, it's cozy warm, indeed. Maybe it's not the hottest thing in the world, but it's cozy warm. It keeps you warm in the winter time. And what we see is, indeed, people are coming back to office. Yeah, there was exactly what Diana said. There was exactly the discussion. Everybody was so scared about. We had the big bosses of the main employees in Germany saying, "Oh, we will reduce people. We will send them all home." And now they realize that does not do any good to our productivity, to our creativity. So that will work in the offices. So people are coming back. So the bad thing that happened over the pandemic, there's only one good thing. We will get better offices. The locations will remain the same. The hot locations will remain the same. But within these locations, we will see a lot better fitted out, totally differently fitted out offices, much more centralized on the human being in there. And I'm not a fan of just putting another certificate on and saying it's now well certified. It's about caring about the people who live there, who work there, putting that together. That's why I earlier on talked about mixed use and converting. Maybe it's difficult, Patrick, I agree, but it's doable. Shopping centers or other. Look at what happens to a lot of these Karstadt and Galeria Kaufhof assets. Yeah, the upper floors will be converted into very nice offices. Maybe the upper floors into resi. Exactly.
And we just add a kindergarten into our shopping center.
Exactly.
So
Excellent.
You have your ass, let's say.
Put the old people back into the center of the town. They don't want to commute 25 minutes. They want to be in the center of the town. They want to have short ways to walk. And that's a good thing. So we are very positive again about, no, we were never not positive, but we are positive about offices, good locations. Pick your location right, pick the best asset in your supermarket, and there's not so much you can do wrong. Will you earn as much money as you could or have earned over the last 10 years with doing much less intelligent things? Maybe not, but still fair and still good return on investment.
Well, Andrew, I would like to say that we've just had a flurry of what's going to be hot right there in the last 3 minutes. So which was what the panel discussion was all about. I mean, I will hand back to you, Andrew. You may have one or two last questions, but I've got my eye on the time, and we never like to go beyond that extra 13, 14 minutes. We probably didn't get around to all the questions.
I think the poll has sucked up some of the questions. We haven't had many questions today, but that's not a bad thing. I think it shows that the panel have covered the topics, and I would just like to say thank you to everyone. Thank you to you, Charles, and thank the panelists as well for a very interesting discussion. To Diane Becker of Catella Property Consultants, to Patrick Brinker, Head of Client Solutions at Hauck and Aufhäuser. I think that's probably wrong, but we'll go for H&A. Sabine Geuss from Principal Real Estate, and Holger Hosang from Sonar Real Estate. And that just leaves me to send you and your families very best wishes for a happy and peaceful festive season. Wish you all a prosperous 2022, regardless of which asset classes you choose to invest in. And we look forward to you joining us again in the new year. So until then, please stay safe. Good afternoon and a happy Christmas to you all.
Thank you all very much indeed. Very lively and good discussion. Thank you. Bye-bye now.
Thank you.
Thank you.
Bye-bye.
Bye-bye.